This is going to be a big report. This is something where many investors, people who are long Tesla stock, are going to be trying to find some reason to stem the slide. Is it going to happen today?
Yeah, thanks for having me. That's a good question. I think the number one thing investors are looking for is just reassurance regarding demand. The year is not off to a good start for Tesla. We know that their Q1 deliveries were down 13% year over year. Last quarter, they guided for a slight increase in deliveries for the full year. So how has that outlook changed? We know that across their factories, they were retooling production lines, getting ready to produce the new version of the Model Y. So that's partly to blame for the weak volumes in Q1. But as you referenced, there has been some brand damage in the eyes of a lot of customers. So I think all eyes are on the company's updated guidance and how much their sales will or might rebound from the very weak level of Q1. We're now forecasting a 10% drop year over year in their sales volume this year.
You've still got, Garrett, a buy or overweight equivalent rating on those shares. It implies, at least in some way, that you haven't had to really adjust your models so much that you feel as though there's potentially even more downside ahead. Can you take us through what exactly the assumptions that you are or that you have are that are keying that maintenance of an overweight type rating?
So in our eyes, a lot of the negatives are discounted in the current share price. The stock has essentially done a round trip from where it was in mid-October prior to the election, had this huge run up where it peaked at almost $480 in mid-December and is back down to where it is in mid-October. So it's been a roller coaster ride. As I mentioned, we're forecasting a 10% drop in sales. We don't think investors are fully appreciating the fact that the positives here, which are the company has the strongest gross margins in the industry. It has an investment-grade balance sheet that's flush with cash. And we think it has a catalyst ahead in terms of the launch of unsupervised full self-driving in the Austin market in a couple months. So, I think Tesla really needs to reassure investors regarding demand for its vehicles and regarding its product pipeline. The company's done a really good job keeping investors focused on longer-term catalysts and sort of ignoring the noise and the challenges that they're facing in terms of EV demand and pricing. So we'll see if they can do that once again this quarter on the conference call.
Garrett, really quickly before we let you go, how just competitive is the environment for Tesla going forward, even without the brand image issues?
Extremely competitive. They've been losing market share across their three major markets in the U.S. In the EV market. They've been losing market share for the last few years. You're seeing it in Europe, big year-over-year drop in sales. And then in China, of course, the market is extremely competitive among domestic EV manufacturers. So their market share losses is at the top of the list in terms of concerns here.